Okay, folks, welcome back. This is our weekend review for March 14th, 2020. Monday, March 16th, G7 meetings all day, high impact. That will obviously have some contribution to the already volatile markets. 8:30 a.m., medium impact Empire State Manufacturing Index. And later that night, high impact Australian dollar monetary policy meeting minutes and medium impact HPI. Tuesday, 5:30 a.m. Now, this is one of those moments where I tell you I don't refer to or honor, if you will, the daylight savings time, which is what we're under in the U.S. now. Last Saturday, we moved our clocks forward 1 hour at 2 a.m. And if we follow that by going into the markets, it's going to create some chaos, if you will, relative to the kill zones. So that's the reason why I don't really honor daylight savings time. So I keep it like it was prior to us springing forward ahead in the clock, 1 hour. I'm not doing that in my kill zones. Okay, so you can see here on Tuesday, 5:30 a.m., medium impact GBP. 5:30 a.m. is outside of the quote-unquote kill zone under daylight savings time. So we're not applying that. We're using the normalized time. Okay, so if I could go back in time, I'd slap Benjamin Franklin for even bringing it up. So 6 a.m. on Tuesday, euro dollar, high impact. For German Jew, we have economic sentiment. Then we have 8:30 a.m. medium impact for Canadian dollar manufacturing sales, and the high impact core retail sales for the dollar. And Wednesday, we have high impact CPI numbers for Canadian dollar, New York Open, medium impact common CPI, median CPI, and trimmed CPI. And building permits for the dollar at 8:30 a.m. Wednesday, New York Open as well. Later in the day on Wednesday, we have FOMC economic projections and FOMC statement and federal funds rate. And 2:30 we have a press conference, and then 8:30 later on that night, high impact employment change and unemployment rate for the Australian dollar. So Wednesday will probably be a volatile day. Thursday, 8:30 a.m. New York Open, medium impact Philly Fed manufacturing index for the dollar. And finally for Friday, March 20th, New York Open, high impact Canadian dollar core retail sales, and that will do it for the economic calendar coming this week. This obviously covers the British pound, euro, Aussie, and Canadian dollar, as well as the dollar. Let's take ourselves over to the charts now. Okay, folks, here's our dollar index daily chart, and just as a brief remark, I'm going to be very brief in the analysis and commentary. I don't want to try to promote too much activity on your part. Things are really about to heat up, in my opinion, in the marketplace in terms of ridiculous volatility, something that you just can't really participate in safely. Not that there's a real term in terms of trading that's called safe, because there's always risk. But it's going to be really brief. All right, so let's go into the daily. All right, so we have our original SIBI in here, sell side imbalance, buy side inefficiency. I said I wanted to see if it gets above that. If it did, then we would get into this one in here. It went right through that one, balanced this one entirely almost with this run here, came back down, and then pushed in on Friday, all the way up to consequent encroachment to here. What I'm looking at now is for the next directional bias going into the remainder of March into the first or second week of April. I want to see if we get above the SIBI here. If we do, then we're going to be making an attempt to get into the 100s and maybe even potentially run to 102. But I'm not trying to be that optimistic yet. We may have came all the way back up to here just to rebalance this, and then may drift lower and upset a lot of things that would otherwise be viewed as bullish on the dollar. If we see a exponential explosion in the number of cases of corona and COVID-19 deaths in the U.S., New York at this time of this recording has reported its first fatality to the virus as an 80-some-year-old elderly person. They're reporting those, and again, I hate to sound like a tinfoil hat, guy, but you guys know me. I've been around for a long, long time, and I've always had these alternative views. Let's call it that. I think that's the reason why they're not doing a lot of the testing, because if the testing was done, because the idea is this: if you're sick and you want to get a test, then they'll give you the test. That's what they're telling you on the TV. Well, how about my mother is sick and she went to the doctors and they tested her for the flu. She didn't get tested for the COVID-19 or coronavirus. I asked her specifically, I said, look, would they test you? And she says, no, I'm going to go and get blood work. So she's going to try to go somewhere else and get a secondary opinion. Am I saying that she has it? No, I'm not saying that, but I find it extremely odd that they make these press reports and they come out and say everybody can get tested. First of all, they don't have enough tests, so that's a lie. Two, even if you do ask for it, they'll tell you that you're not really fitting all the criteria. But that's not what they said. Okay, they said if you want to have the test done, you can have the test done. But it's a bunch of cover-up. It's a lie, okay? If they started, if they had the test, let's put it that way. If they had the test and they were testing people, we would have extremely higher numbers, I believe, by now, okay? It's anyone at this point, that drops according to the flu, I'm not a believer of that. It's going to be swept under the rug, and it'll be numbers factored into the flu fatalities, and not the U.S. Suffered this many people dying of COVID-19. So I just think that they're doing everything they can to try to make it look like we've done a good job, okay, or the administration has done a good job in preventing and circumventing the need for all of the sick and dying that we're seeing in the other countries. At some point, it's going to become obvious, and people are going to start becoming unhinged because of that. Every country around the world isn't involved in the hoax that everyone was promoting, and I will readily admit that I felt that it was the Chinese government putting that out there to try to break up the protesters. But yeah, I started looking at things and getting evidence, if you will, from different sources, and it quickly became too much for me to just simply say it was that. And then I waited to see if it would spread outside that country. And well, look, we had it in Korea, we had it in Italy, bad, and Australia's got it now, the UK's got it now, Iran's got it. So I mean, it's everywhere. So the folks that want to hold on to this, it's just fake, it's a flu. Listen, I'm not a believer that all the other countries are actively reporting the numbers. I think it's actually higher than that. But it would create even more civil unrest among everyone, because at some point people are going to say, you know what, this is insane. I'm going out and getting whatever I can get. And they're going to loot. They're going to break into stores and break into people's homes. And that's my concern. Okay, and that's why I believe in the Second Amendment, because if someone comes knocking on my property, they're going to get ventilated in a different kind of way. So that's my concern. So if you don't have a plan in case that type of thing happens, you might want to put one together. Okay, it's not just food and water and medicine. You want to have some form of defense, because if this is exactly what I think it is, we're on the beginning of many months of this, and it progressively getting worse. So do the best you can. If you can get more supplies and food, don't listen. There is a lot of people out there trying to guilt everyone, saying, "Oh, you're selfish. You're this. You're that." You're not selfish. Okay, you're taking care of your family, and if you can help someone that's in need, do it. but you still have to take care of yours and your family. And the word says if you don't take care of your family members, you're worse than an unbeliever. And that's how I live. So if you can and you have the resources and means to do so, get more food and water and medicine, because you're not going to be able to get out to the stores at some point. I believe they're going to do a forced shelter in place. That's the word you're going to hear. And you're just simply going to have to sit in. How long? I don't know. But if you're not prepared, it's going to be very uncomfortable. So anyway, I'm waiting to see if we see an exponential growth, basically, in the numbers in the U.S., and that'll give me some idea of what they may be taking the dollar to. Technically, I'm watching to see this right here. If they completely fill it in, it can go a little bit above that. There's a little bit of an imbalance right in here, volume imbalance. There's no bodies in here, just the wicks. So it can go up to, let's see what the open is on that candle. Looks like it is 99.08. So that could be the level. It might want to tag that. It could spread to 99.10. I mean, we're not going to get that crazy about the precision in there. But if we get above and continuously trade, I don't think we're just going to go to $1. I think we'll go to 102. Not immediately, but that's what I think they'll try to take it to. If we start to recede and go lower, I think it'll just want to rebalance to this price point here. And then we'll see if there's any willingness to rally there. So in other words, if we keep the high here and we open lower and trade down and rebalance all of this and trade down to here, or a consequent encouragement of this SIBI, then turn BISI. Okay, so this is a balanced price range. I'd rather see it not get down to consequent encouragement. I'd like to see it trade just to the top. Okay, I get a lot of questions. When do you anticipate a imbalance filling, or when not to fill? This is one of those instances where I would rather see it not come down below the top of this old SIBI, but now we have this run all the way up. So this candle went completely through, no pauses on this time frame. All this down delivery, all up delivery on one single candle. So at the top, this becomes a balanced price range. In these instances, where we have this pattern here that creates a balanced price range, the highest form of sensitivity you're going to see is on the high of the SIBI or the top of the BISI. That means this candle's low. Okay, so it's this candle's low or this old high on the previous sell side imbalance, buy side efficiency. Those are two levels. I don't want to see it come down between this candle's low and this candle's high in some midpoint range. I don't want to see that. Okay, I don't want to see that at all. Can it do it? Yes, but it's far unlikely to be bullish if it does so. It's better if it just comes down here and gives us our institutional entry drill right here at this low and then start to run. But it may not even do that. It may even just keep pressing higher. And this will be a breakaway gap. Okay, so then we'll refer to that later on this week, should that come to fruition. Let's go into a 1 hour chart. All right, so we have our old fair value gap in here, the consequent encouragement. Trader up into that. You can see it's rather handsomely delivered. Nothing really in the form of imbalance here except for this tiny one right there, which is an old fair value gap as well. So we can come down to that 97, 96 level, get some kind of reaction there, and then press higher into the 100 level. That may be a scenario that takes place. The only concern I have is these equal lows here. I would have rather seen these lows be taken out and maybe punch through this low here. Or if this low was here, we didn't have these equal lows. It would have been better if it just would have pressed higher. And that means that it would have been far unlikely for this to be a stop run on sell stops to go higher later on. But because we have equal lows in here, it may want to go below this again and trade below here and trade to the top of that fair value gap there. Again, these are levels that were on the daily chart. So if you're confused again what these levels are, just rewind the video and you'll see what these levels are on the daily chart. All I'm doing is dropping down into a lower time frame. On the 15-minute time frame, you can see we have those equal lows, they really stand out on the 15, and we have equal lows here. So again, if we lose this fair value gap on the daily chart that's been extended through, watch this 97.10 level. Okay, in that area, 97.10-ish. Is that right? 97.10? Yeah, we'll call 97.10, which would clear up and run below these equal lows, rebalance this BSI, and run below the sell side liquidity here. It can do that and still be bullish on the daily chart. So that way, I'm not looking for it to come down here and then careen lower. Can it do that? Probably. Because of the conditions we have in the marketplace and the uncertainty of what's going to come out next. They can come out, with 3,000 cases in the United States all of a sudden, and that's just going to, cause all kinds of volatility. And I think that's where we're at. This week, going into the early parts of the following week, we're in those days of the cycle for it to really make itself known. And I've been counting down on Twitter. We got about till Wednesday or Thursday, I think. That's when we're going to be in the heat of it. That's when the exponential doubling and doubling and doubling, you'll see the numbers really start to grow. So that's what I've been basically counting down to on Twitter. It's not a mystery or anything, guys. It's just I've looked at the delivery of the first case of this virus in other countries, and then counting when they really started to have exponential growth. And we're in that Wednesday, Thursday of next week time frame in the U.S. So we'll start seeing, the unfortunate growth of this stuff, if it is indeed widespread, as I believe it is. The problem again is they have the benefit of sweeping it under the numbers of the flu, and I expect that to be what they do. So anyway, let's go to Euro USD, Forex.com's feed. All right, so here we have the euro dollar. We had two fair value gaps in here, BSI here and a BSI here. Buy side and balance, sell side efficiency. Buy side and balance, sell side efficiency. We traded down through that, came back up, worked into the levels again, and then sold off. We'll look at that when we go in the lower time frames. But I said that if we lose this, we're going right down here to rebalance, and boy, did it do it perfectly. It's like so handsomely delivered. All of this was the opportunity. Now, if we come back up a little bit, trade back into this butt end of this candle right in here, that would be the candles open on here. What is that at? 111.36.2. We'll just call it 111.35 just to be on the safe side. I'd like to see price be maintained to that level or less, and then we'll see if it wants to roll over and rebalance this BSI down here. If we lose this one, okay, this is very important in your notes. If we lose this BSI and we trade lower than that, I believe we're going to 1.03 on euro. Okay, that if this gives up the ghost, okay, and dollar shows its strength above, what was it? We'll say $1.50. Okay, so if the dollar can go $1.50, not 150, 100.50 on dollar index or Dixie, and we get below this, then I think that we're going to be reaching for 1.03 or in that vicinity for the euro dollar. Let's drop down into the hourly chart. Nice sell side liquidity run here, and look at the work inside that fair value gap. Okay, so we had that old BSI, and now it's become a point of inversion and bearish order block and SIBI. So we have a return to the bearish order block, return to the bearish order block, and it's inside of an imbalance that's being rebalanced and then rolls down. The low here on this candle, if I can get my mouse to work, 10.55 and 6 pipettes, and it only went down 3 pipettes below it on this candle here. So in my opinion, I think it needs to go a little bit lower. It's too shallow, and we'll probably gap down. gaps down, trades back up, fills it, and then we can see it run down into this level here, and we'll see if it has any willingness to get below that 1.0840 or 1.08. What's the low in here? Yeah, let's call it 1.0830 for now. Market maker sell model underway. The original consolidation in here, that's already been cleared, but I think it's part of an overall larger fractal on that daily chart that leads to this and maybe lower. 15-minute time frame on euro. Real nice look at that SIBI and that fair value gap working here. And optimal trade entry in here as well. Another optimal trade entry here. Rebalance, fair value gap, SIBI, bearish order block, overlap, bottom of the range on that fair value gap on the daily chart. Distribution, sell side imbalance, buy side inefficiency in here. Beautiful rebalance there. It sells off again. Equal lows, relative equal lows. We're going to go lower than 110.60, I'm sure, right from the jump on Sunday going into Monday, I believe. All right, so let's go to cable, and that'll be it for this video. I'm going to keep it short. I done talked a little bit more than I wanted, and I'll give you a price action lesson on Wednesday of this week, so the video will be longer. All right, so we have our fair value gap here in the form of a BISI, buy side imbalance, sell side efficiency. I said we were reaching for that, and it did that handsomely and rebalanced it here back into a order block. So in here, normally this would be a nice area to see a bounce and run back up a little bit. We have relative equal lows in here, and then we have another gap in here with an order block. So we want to see it run below here. So let's see here. What's the low on that? 21.95. So we'll call it 21.80. Okay, so that'll be a 15 pip run below that. So 121.80. Let's put our level on that now. 121.80. $21.80. All right, so that's what we're looking for, a run below to get to that level here. And then any further decline takes us down into this BISI right here, buy side imbalance, sell side inefficiency, and then we have the order blocks open here at 121.60. So there's your 80 level we're looking at, and then we're looking at 60. So it may be sensitive there. I'm not readily committing to a run below these lows yet. And the reason why is because we have a low, a low, a low, a low. Each one went lower. Let me move that out of the way so you can see it. 1, 2, 3, 4 lows. 1, 2, 3, 4. Each lower each time. So we may come back down in here, and then we'll get a meaningful bounce or rally. If it does, we can see it come back up into this fair value gap or this one here, which would also rebalance this big candle if it's left open like it is now. And that could be a point of rebalance. And then at that time, if we start to break lower, then I'd be more interested in seeing it run below here. But unless it's just exceedingly bearish and just the UK gets a huge number of cases, which I think may be in fact what you guys are gonna, or gals are gonna contend with, because Boris wants to have the whole nation infected, which is asinine in my opinion. But again, like I said, they want it to spread. They want it to spread. So to me, I think it's a calling. You know, they want to get as many people sick as they possibly can with it. And you know, just because a lot of people get the virus, it doesn't transmit immunity to your neighbor. It doesn't work like that. So I'm not sure what these people are thinking, but nonetheless, it's not good for you. All right, let's go over to the hourly chart and expand this a little bit more. All right. So the last bit of business we saw back here went to Consequent Encroachment. And I said here at the beginning of last week's, what is that? Wednesday's review. It's probably just going to be heavy and just roll right over. And it was just like that. It was heavy, went right lower. Didn't come back up here for any of these imbalances except for this one here. So this is your institutional entry drill. institutional order flow entry drill. Okay, that's what the full name is. The high is 126.35 and 7 pipettes, and this candle here went to 126.41 and 5 pipettes. So we went above it in here. That's enough to get short, and you have to find a swing high above that. That would be here. So your stop would be here. You're selling short there. Now, for some of you, that might be, it's too many pips. I can't do that. Well, you adjust your leverage if you're going to trade the hourly setup. And then we have a little bit of retracement in here, and then a nice dumping. Come back up, and then sells off again. I really like that 121.80 level, especially where we're at right now. So if we get any kind of further erosion, watch that level in there. And then it may want to come up here and clean up some of this imbalance on the downside. Finally, in closing on this video, we have our 15-minute time frame, and not a whole lot to talk about on this one. Yeah, we have that. This is that institutional order flow entry drill fill right there. That, in other words, you're using this candle's high to paper trade or demo trade a short, and using the hourly chart, your stop would have been back there somewhere. On the 15-minute time frame, your stop can be here. Okay, so that's how that works. Relative equal lows, even though we have a retracement, it runs through it, shallow, comes back up, trades into the bottom of this candle here, mitigation, sells off. So we'll be looking again for a continuation going lower. For cable, I'd like to see a gap down. I want to see a gap down, and trade up, fill it, and then go lower. Okay, into that 21.80 level. And I think that's going to be it, folks. Be careful. Be very aware of touching your face and and your eyes. It's very easy to forget about it, and you get an itch on your nose. It's just like that when it's flu season, or if it's something like this. Okay, it's even worse. It feels like your skin's crawling. Okay, at least it's been like that way for me. I got these little itches that are right there on the inside of my nostril. Okay, or it's right on the tip of my nose, and I get the impulse like I gotta hurry and grab it, and I use the inside of my shirt. I just grab it and fold the inside of my shirt up to my nose and just rub it, and it's done. But I probably shouldn't even do that. I probably should just keep tissues next to me and just, there it is. But sometimes you don't have it, folks. You're out there, driving or walking from one room to the next, and it hits you, and all of a sudden you just feel like you got to scratch it. Be careful, okay? And if you're out and about or touching things, wipe your hands down, okay? And the things that you bought from the store, I'm fanatical about it. I was a germphobe before this happened anyway. I didn't like shaking people's hands before this happened. So I just know that if you saw how I lived, you would think I was Howie Mandel on steroids, because that's how I live. I don't want to have any of this stuff in my home. And the things that I purchased, I wiped down all of it. And if it had cardboard boxes, I took it out of the box. And the internal wrappings is what's stacked up inside my pantry. So that's how I'm doing it. So maybe you don't feel that you have to go to that extreme, but I'm not taking any chances. So if I can minimize it as much as I possibly can, I don't mind doing it. And I think that's going to be it. Like I said, price action lesson will be a part of this Wednesday's lesson. So I'll give you a little bit more to work with. Study the list that we worked up in the last couple videos, where the strongest currencies and the weaker currencies. Study them now going forward, regardless of what the dollar index does, because it's important to see what they do in relationship to walking forward now, because you've already seen extrapolated moves using that list. Now, if we have the dollar rallying and foreign currencies dropping, okay, you want to be doing the opposite. Okay, you want to be looking for currencies that would be weaker against stronger currencies, and then looking for movement lower on pairs that have the weakest currency paired with the stronger currency, the foreign currency. So everything we just did as a mock-up for the interbank inequality lesson I've been teaching, you want to just reverse that whole idea, because we were using the premise that the dollar was weak on February 20th. Now, if we have extrapolation on the upside on the dollar, now I don't know that's going to happen yet, but let's assume that it does. That's what you want to be studying going into this week, because if the dollar does blow through that full dollar mark and make a run for 101, 102, you want to be studying the effects of the weakest currencies. Okay, and how do you look for that? You want to look for currencies that are failing to make higher highs, easily making lower lows when other currencies aren't. Okay, that's the easiest way to find it in price action. There's other things I'll teach you on Wednesday, but that's enough for now. And until I talk to you by way of Twitter, I will talk to you on Wednesday in the midweek review. Be careful, and I'll talk to you then.